Hi, this is Jin Rong, Market Strategist for IG Singapore. As we round up the first quarter of 2024, Wall Street continues to build on its stellar gains, with the S&P 500 and Nasdaq up 11% year to date, while the Dow Jones is up 6%. The recent run in economic data, alongside the dovish tone from the latest Fed meeting, has led markets to look forward to impending rate cuts from the Fed as early as June this year, while keeping hopes of a potential soft landing very much alive. Gold prices have been the hot favorite last week, keeping its run to fresh record high at around the $2,260 level. Crude oil saw gains as well, with prices keeping its run of higher highs and higher lows since December last year, and potentially eyeing for a break to a fresh year-to-date high. As markets return from the holiday shortened week, there are a few key data to keep an eye on. First up, we have the Eurozone CPI data out on Wednesday. Both headline and core inflation in the Eurozone has shown a clear declining trend since their peaks in 2023, and with growing calls among European central bank policy makers for an imminent policy easing, further inflation programs will provide more room for the central bank to consider earlier rate cuts. Ahead, expectations are for the headline rate to ease to 2.5% in March, down from the previous 2.6%. Next up, we have the US Services PMI data also out on Wednesday. Past historical recessions in the US tend to be marked by its services activities in contractionary territory, so as long as we do not see it happen, the data will continue to keep soft landing hopes alive. Current market consensus is for US Services PMI to remain in expansion at 52.6, which is unchanged from February. If it holds true, it should suggest that services activities have been holding up, and that should push back against any recession concerns for now. Lastly, we have the US non-farm payroll job report out on Friday. At the recent Fed meeting, US policymakers have revealed some tolerance for slightly higher inflation, sticking to their view for 3 rate cuts through 2024. With markets looking for the Fed to kickstart its rate cutting process as early as June, any further signs of cooling in the US jobs market will be much needed to validate such timeline. In Fed Chair Jerome Powell's previous comments, he acknowledged that labor supply and demand conditions continue to come into better balance, so further softening may be what he wants to see. Ahead, expectations are for the US economy to add 200,000 jobs in March, down from the 275,000 in February, while the unemployment rate is expected to stay unchanged at 3.9%. That's all for now, and I will see you next week.